Hello traders. On behalf of TradeV Investments, I welcome you all to technical trading webinar, market structure and market dynamics. I thank you all for taking time out from your otherwise busy timeline and for attending this webinar. My name is Partha Banerjee. I'm a full-time trader trading for living. My purpose here is to help fellow traders to progress into their next level of market understanding so that they can also start enjoying the benefits of trading. Those of you who don't know me, my trading experiences come from having completed Diploma of Technical Analysis. I'm a certified financial technician, completed general advice on derivatives, specialized techniques in technical analysis, FIN 231 technical analysis, personal advice on foreign exchange, Tier 1 advisor compliance solution in specialist knowledge security certificate. Myself is an engineer, having got project management professional from Project Management Institute USA and certificate of global business leadership from EU21 Global Singapore and Harvard BL. Way back I started my consultancy career after completing my SAP application from SAP AG, Germany. My trading advantage is my 15,000 plus hours of screen time experience, coaching and mentoring 700 budding traders, delivering 300 plus 1 day, 2 days and 3 day seminar and boot camps. This webinar will be approximately for 45 minutes duration. You may post your question anytime in your query section or at the end of each slide, or park your questions till the fag end of the presentation. Please raise your hand if you do not understand what I said. I'll be more than happy to explain it further. Please let me know if I speak too fast or too slow, or if I missed something which you want me to repeat. Alright, so let's get started with the general advice and risk warning. Trading leveraged product carries significant risk and is not suitable for all investors. Please ensure that you fully understand the risk involved before entering into any trades. You could lose substantially more than your initial deposit. We recommend that you seek independent advice to ensure you fully understand all risk involved before trading. This presentation is provided for information purposes only and should not be regarded as financial product advice. The information does not take into account your specific objectives, financial situation or needs. Therefore, you should consider the information in light of your specific objectives, financial situations or needs before making any trading or investment decision. TradeV Investments ABN number in front of you is a corporate authorized representative of International Capital Markets authorized representative number in front of you. Today I will cover what consists of a market. I'll take your participation as well. Representation of price, schools of thought on trading, bar by bar analysis, establishment of peaks and troughs, I'll try to tell you how to analyze bar by bar so that you understand in a same time frame how can you have 2 or 3 trend analysis. I'll show you in a minute. I'll try to establish the peaks and troughs correctly. Valid and invalid trend lines. I'll show you the way how to draw a valid trend line and how to how to avoid drawing an invalid trend lines. Most of the traders probably don't know how not to draw invalid trend lines. Formation and characteristic of supply and demand. I will show you how they are formed and what are the characteristics of them and how to take advantage of them. I'll also talk about support and resistance and how I'll show you how price moves between support and resistances. I'll touch upon wave structure, not from the totality of Elliott wave analysis, but the way simple market waves are formed through impulsive and corrective structures. And I'll also try to show you waves within waves. And lastly, I will conclude whatever we have discussed through different forms of market structure, starting from what is the price, what consists of market, what is trend, and so on and so forth, how price moves between supply and demand and within support and resistance. All right, before I can get started, let us do an audience participation. Please raise your hand or send me your chat through your response through chat section. Who trades professionally? I'll give you 20 seconds for this. Yes, Manoj says yes, Robert says yes, FX Trader says yes. Good, go ahead, go. Fantastic. Pan on fire. Yes, that's a good name. FX Bookie said yes. Fantastic. Very good. And Nambia said no. That's all right. Good. Yeah, I have. Yeah. So I'm getting no and yes mix. Yeah, Jane says no. That's good. Be truthful to yourself. And next question. Who trades part-time and works full-time? Yep. Fantastic. Can says yes. Pan says yes. Go ahead. Yeah. Jane, Nambiar, everyone almost 100% working full-time and trading part-time. And next question. Who is not ready to trade yet? Please go ahead and please type in. Yeah, Vasil says me, that's good. Be truthful to yourself and answer these questions. I have 5 questions and I have a competition based on the questions and answers you are providing and based on your understanding of the market structure and dynamics at the end of the presentation. The most important question here is who wants to learn to trade like the professionals? And my definition of a professional trade. Yeah, fantastic. Vasil says yes, me, Can says yes, Jen says yes, Carlos says yes, Vasil says yes, Pam says yes, FX Trade yes, fantastic. Clive says yes, brilliant, fantastic participation. Yeah, Mark says yes, fantastic, very good, excellent participation, right? You people are very fast. So 100%. This is probably one of the very few webinars in which I have got 100% answers to this question as yes. So all of you probably wants to trade like a professional. Yeah. So my definition, people ask me who is a professional trader, and we can go to Wikipedia or Google it. But my simple definition is a person whose profession is trading, like an engineer, a professional engineer, right? So a person whose profession is engineering. So we all 100% I got a response. And FX Bookie says that's why we are here. Fantastic, brilliant, very good. All right, the last question. Who subscribes to a newsletter service or takes advice on their trades? This is the last one. Yep. Pan says yes, Can says yes, Jen says yes, me, all through me. Vasil, Mark, FX bookie, but not to do. All right, you are getting it, but not to do it. All right, Clive says no. Manu says no. Yep, Carlos says no. Very good, fantastic, brilliant. Robert says no. What you can do, instead of sending to all participants, please send it to me, presenter and host. You can select it under the send to option. Just select it presenter and host. It will be there in your chat section at the bottom. See, send to, you need to select here, send to. So probably don't send to all participants, otherwise everyone will be confused. But very good, excellent. Very good, fantastic. Okay. Now, my first technical question to you would be, what consists of a market? Can you tell me? What is your understanding? What consists of a market? Please, go ahead. If people are very fast, please type in the chat box your understanding. Interesting to see the different answers. Clive says, all right. Pan says, buyers and sellers, supply and demand very close. Jane says, buyers and sellers, fantastic. FX bookie says, Clive says, buyers and sellers, fantastic. And then, FX trader said where buyers and sellers meet. Fantastic, brilliant. Very, very good. I will start with this presentation will be actually built on the simple concepts, and then I'll show you at the end some of the things which you probably never heard of. My understanding of what consists of a market, I always say, market consists of price plots. Price plots represents human behavior. Now, since human behavior is built on greed and fear, as probably a spiritual being living a human life with flesh and blood, we are also having two basic elements of greed and fear. Now, this behavior, probably as you know, this behavior is consistent, maybe last 10,000 years or whatever it is, and for next 10,000 years, right? Since human behavior is consistent, hence it produces price pattern in the marketplace, which is also consistent and repetitive in nature. All right? So we as professional trader trade this repetitiveness of the market consistently, because that can be predicted or at least can be seen when we are training our eyes to be a camera and not a thinking machine. Now, representation of price. So price can be represented through either through a open, high, low, close, or price candles, or closing price only, or any other variation. So for example, let me show you for a moment. This is a chart in front of you which is US Canadian dollar, and this chart is represented in price bars. And if I have to show you quickly the candles, the difference between bar and candle is candle open and close is covered with a body. So that reflects that this is an engulfing candle, this is a hammer candle, this is again bullish engulfing, and so on and so forth. And if I go to the line chart, so line chart will also probably tell you the best way to know higher close consistently. So as we know, starting from here, if I have to show you, starting from here, price made first higher close, right? And then from here at the top, same thing happened, price made a lower close here, right? And then take this out. Okay, so these are the various representation of price, as you probably know. Now, schools of thought on trend. There are many schools of thought, but probably the most used is this one. Trend is defined by highs and lows of price bars. Uptrend is built on higher highs and higher lows, when price is printing higher highs and higher low. And downtrend is built on lower highs and lower lows. I will show you some examples of uptrend and downtrend in a minute. Absence of either of the above two, that means price is making higher high and lower lows, or lower highs and higher lows, leads to ranging market. Break of trend, this is extremely important. Those of you who are new to trading or probably don't know this, take a note of it. Break of any trend leads to congestion or accumulation or distribution. So just the downtrend break does not start an uptrend immediately, or an break of uptrend does not immediately start a downtrend unless and until the distribution happens at the top or accumulation happens at the bottom. I'll show you one by one. So let's show you the uptrend example like this one here. Price is making higher high, higher lows. From here, as you can see, from the fan line or from the individual bar, when I will analyze the bar, you will understand. So this is uptrend, as simple as that. Anyone having any doubt? And euro in front of you, euro is having a downtrend, because price is printing lower high and lower low, like this one, this one, this one, this one, this one, this one. And apart from last month, which was an inside bar, starting from here on this, we are having lower high and lower low. So this is downtrend, and previously it was after the one was uptrend. All right, so let's show you something which is not trending or which is having a mixed trend. Let's see this one here in front of you. Henoke JPY has printed a higher high, as you can see from here. 1st of November 2014, higher high, but the current month or the previous month printed a lower low. So this is not having any trend, because price is not following the definition of trend, right? So it is printing higher low and a lower high. Now the last one I want to show you is probably, let's see which one, let's try this one. Yeah, the break of a downtrend, like this one here in front of you. The break of a downtrend does not immediately start an uptrend. So unless and until some kind of pattern is formed and some kind of break happens of the previous peaks, I will show you how to establish the peaks. Like the structure can be head and shoulder, can be double bottom, can be triple bottom, and so on and so forth. So just the break of a downtrend does not immediately guarantee start of an uptrend. Okay, so these are the 5 points which I wanted to show you as in schools of thought. Now I'll do a very interesting analysis on bar by bar. Okay, so please pay attention to this one. This will really help you to understand how to analyze market very simply. So what I will do in bar by bar analysis, I break each chart into 3 time frames. For example, long term, I call it third time frame. Medium term, I call it second time frame. And short term, I call it first time frame. Same chart. Don't get confused that I am mixing charts between monthly, weekly and daily. No. So it's the same chart. I will show you how to break it down into 3 time frames: long term, medium term and short term. And then I'll show you by capturing the individual bars, highs and lows, how each individual bars represents the trend in the short term. Then the combination of the short term would develop a medium term which is known as peaks and troughs. From these peaks and troughs, I will establish the long-term trend and try to identify the major trend definition. Alright, so let's do it. I have done it once for you because this is 45 minutes only. So I have done it for you and I will show you how to go for it. So this is the one in front of you. Let's see the one I have done it just before this webinar. See how I have done each individual bar after this is USD JPY. After the break of this head and shoulder, each individual bar when printing a higher high than the previous one and a higher low than the previous one, I am defining that as an up bar. Similarly, each bar which is printing a lower low and a lower high, I am defining that with a D, down bar. Now, when I am seeing a up bar followed by a down bar, that is forming a peak. Similarly, when an up bar is preceded by a down bar here, that becomes a trough. So as you can see, the up and down bars are telling me what is the correct peaks and what is the correct trough. Then what I am doing, so this U and D is the short-term time frame. P and T, peak and trough, are the medium term, and P star and T star in front of you are the long-term time frame analysis. So what if this can be done? If you don't know, we can help. This can be done in 1 minute chart, to daily chart, 4 hourly, monthly, weekly, any chart. And then what we need to do is to take position. We can do join peak to peak, and if T star P star is up, if P and T is up, if U and D are up, so all the three time frames are up, as in the last bar in front of you is an up bar as of now, and we have another 3-4 days to close this bar because this is a monthly chart in front of you. And see how this bar, the last one, has printed a higher high and a higher low, unless and until this low is coming and taking this, which is I don't think it is possible. So I hope you have understood my way of analysis. So this is extremely important to define your understanding, your idea, so that you can have a system and we can help you on that. Any question? So FX trading asking, can you explain UDPT again, please? All right. U is a up bar, individual bar, like this one. Let's take this one, individual, or let's take the last one, which is the this month bar. This is a monthly chart. See how this bar low is higher than the previous bar low, and see how this bar high is higher than the previous bar high. So this is an up bar. Okay. And one more thing I need to highlight to you, that see, I have not labeled the inside bar or the outside bar. I have not labeled it. So these two are inside bar and this is an outside bar, and I have not labeled it, and it must not be labeled. Okay, have you understood FX trade? That's a good question. Jane is asking, do you have a software to label those bars? We can help you develop that program for you, and basically based on this, because you are attending to this seminar, it can be a trading up strategy as well. Very powerful, very extremely powerful. All good. Okay. So Clive is asking, what is the lowest time frame to analyze trend on? It depends on what you are trading. So supposing you are trading a scalping system, then probably I would prefer for a scalping 1 minute to 3 minutes, or if you are like me trading a daily end of day closing, then probably daily is not a daily time frame. So for scalping I would suggest 1 minute. Robert is also agreeing with me. Very good question, fantastic. So similarly, as we saw, we can have multiple time frame confluence can lead to trend analysis. For example, starting from yearly, quarterly, then do the same on monthly, weekly, and then let's do the same thing on the daily chart. I will show you in a minute. All right. So my advice to you would be to focus on 5 times the time frame. So for example, if you are doing a 5-minute chart, please see what is the 30-minute doing, and if you are trading 10 minutes chart, please see what hourly doing, and if you are trading 4 hourly, please see what the daily is doing. 5 time frame from my perspective is extremely important, and take decision based on this confluence. So I will show you one opportunity here. So let's show this one here. Okay, let's see this one, and let's make this yearly. Okay, see what I have done. I have joined the swing high as a horizontal line. So swing high is a peak, forming a peak. Similarly, the swing low forming a trough. So I have drawn horizontal lines on each one of them on the yearly, no matter how many years, not much, maybe 30-40 years. So only 1, 2, 3, 4, 5, 6, 7 lines, and in that 7 lines, the top line, the price is now 78.97. So if this fellow price has crossed to the downside, I'll make it as red, and the below ones are support. So similarly, when I go to the quarterly one, these are my quarterly lines, same way drawn. Okay, now let's see. I am trading a 24-hour model. So 24-hour model, if I am trading, let's show you how this market can be structured. See, there is no line here, but in a minute, if I tell the software to go to lines displayed on the inferior time frame, see how the lines are coming, and how we can take advantage of the support and resistance which we have drawn. Like this one here is a yearly support, like this one here is Fibonacci yearly. So whenever we are this is a very good line, trend line, as you can see in front of you. So joining this 24 sorry, that has to be 24 hours. Yeah, so this is a 24 hours chart in front of you, and all these lines are coming from yearly and quarterly, and you can see how price got bounced from there, how price broke this level, how price got support at this level, how price got resistance at this level, so on and so forth. Beautiful, isn't it? So see this yearly support resistance and quarterly support resistance, and are extremely good. All right, so that is another part, another way to understand the structure. Valid and invalid trend lines. So Jen is saying, sir, could I have email to find out about the software? Yeah, don't worry. I'll give you my email so that you can communicate with me. Yeah, that's the best way to communicate with me. At the end of the session, I'll give you the email. So I'll show you incorrect way of trend line identification. Correct way of trend line identification. From my experience of 10 years and 15,000 hours, and having seen 740 traders, I've seen most of us probably don't know how to draw a perfect trend line. I always say trend line represents a trend. So if there is a trend, draw a trend line. If there is no trend, do not draw a trend line. I will show you in a minute. So trend line can represent the strength of a trend. Now let's go to the example of a downtrend line. What you need to do is you need to join the two swing highs, as I have shown you, SH swing highs, provided price has crossed in between swing low. So this was the first swing high, and this is the second swing high. I can only draw this and confirm this as a confirmed trend line if the in-between swing low has been taken out, like this bar has taken out the in-between swing low. Everyone understood? Any question? Similarly, uptrend line. So thanks, everyone understood. Very good. Similarly, for uptrend line, what you have to do, you have to make sure that the two swing lows, probably you know what is a swing low, isn't it? If you don't know swing low, please let me know. So I'm joining the two first swing low with the second swing low, and only when I'm making it a firm trend line is when the in between swing high is taken out. In between swing high is taken out by the price. Taken out means what? Has crossed, isn't it? Has crossed. So this is an uptrend line. So what I was telling you, that unless and until the in between swing high or the swing low has not been taken out, so the lines would be dot dot and they will not be conform as in front of you. So I have three trend lines which are tentative, not confirm, and three trend lines which are firm and they are confirm. So this way, if you really practice drawing confirmed trend lines, and you will probably not be trapped by the market participants every now and then. So formation and characteristic of supply and demand are, these are sweet spots for trend reversals and continuation, and these are leading indicators. So Can is asking, are you defining swing points with P's and T's bars? Yeah, this is a P and T between three bars. Fantastic question. Very good. Very good. Good question. Good understanding, Can. Jen is saying, do you have a software that plots those yearly, quarterly trend lines and trend lines according to swing highs and swing lows? Again, at the end of the presentation, I will share my email ID. Please get in touch with me. I will help you on that. So this is a leading indicator, supply and demand. Examples of supply demand, as per my understanding, can be pivot lines. I use very heavily Fibonacci lines and major turning points. All right. So these are the three supply and demand. Let's see one example of a price moving within the pivot lines. So what I have done, I have plotted monthly pivot, as you can see, PIVM, and weekly pivot as PIBW with resistance and supports in front of you. Now let me show you supply and demand example through pivot line. So see how price is continuously bouncing from pivot to resistance 1 and then come back to pivot, again test it and again go to resistance 2 and come back and test the resistance 1 and break it and come back and take a rest at pivot and then again break it and come back and take a rest in S1. So these pivot points can be extremely helpful in understanding the market dynamics. All right. So FX Trade is asking, do you include 3 bar or 5 bar to identify P and T? Actually 3 bar. I prefer 3 bar. 5 bars can be very late. That is good question. Very good question. Supply and demand through Fibonacci. Fibonacci should be drawn from a swing high to a swing low or a swing low to a swing high, depending on which way the trend is. And I have drawn this Fibonacci after a movement of from here, this one, as you can see, swing low 100% to swing high 0%, and how I got 3 opportunity to see market participants have respected the most important 78.6 Fibonacci levels. All right, have you understood this? And the close, any bar bouncing from the Fibonacci level and the next bar closing on top of closing above the high of the previous bar, which has bounced, is a very good example of taking a long position there. Are you understanding? I am giving you some extremely strong concepts on market dynamics. Yeah, Jane says yes. Please communicate with me so that I understand. Yeah, so fantastic. Most of you said yes. Very good, excellent. Now, knowing support and resistance well, I think I showed you yearly support and resistance, quarterly support resistance, monthly support resistance. Monthly, I don't do much because generally they are captured automatically by the quarterly ones. Monthly, what I do, actually, I do two trend lines, one uptrending line and one downtrending line, if there. And from that, the examples which I showed you from time to time, this is a monthly chart. See, this bit here from this P to this T, there is a triangle form, and similarly here there is another triangle form. So these trend lines, if you are drawing in a monthly, you can exactly pinpoint the day where to enter, because the day will close above this trend line and the next day the high would be taken out. All right. So these are pretty simple but very powerful market structure and dynamic concepts of monthly and weekly support and resistance. You can do the same. And daily support resistance. Yeah. Fantastic. FX bookie is asking, are supply and demand the same as support resistance? Loosely speaking, yes, but I understand my concept of segregating them. Supply and demand I consider from the long-term perspective, and support and resistance are formed in the immediate perspective, as I probably showed you how to break it down to long-term and medium-term and then short-term. All right. So draw horizontal line on the swing low, I had already showed you, and draw horizontal resistance line at the swing high. You would be glad that you had drawn this line, and after so many days price got stuck there and it bounced from there and the close happened above that. So these are extremely sweet spot to take positions. So in front of you there are 4 trades. Similarly, this is an yearly chart, and price is breaking the yearly resistance supports for the Australian dollar in front of you from 1.1. It is now 76. Probably it is heading towards 70. Similarly, this is a weekly chart in front of you, and this is for Euro US dollar, and as we can see how it is after printing lower highs, lower lows, lower peaks, lower troughs, and lower P star and lower T star, how it has continued its journey down. Wave structure. I always believe that market moves in waves. It makes an impulsive wave followed by a corrective wave, and similarly another impulsive wave and followed by a corrective wave. We can also see waves within waves. So the way I showed you P star, T star, P, T, U and D, the same way I do my wave structure here. As you can see, the blue line is the line which is coming from P star and T star, and then or the P correct, and the green line is coming from the P and T. Yeah, do you have any question? All right, do you have any question? DJ is asking, what is your preferred chart time for analysis and trading? My personal characteristics matches best with daily trading. I also trade. I also break it down to 2 time half day close, like 12 hourly trading, and when I am getting time, then I also concentrate on the 4-hour trading. So I have 3 trading models: daily and 12 hourly and the 4 hourly. So to conclude our discussion, because we are approaching the 45 minutes mark plus the 5 minutes for the 3 minutes technical breakdown time. So price is the plot of human emotions. Since human emotion is constant, hence the market behavior also. Market moves in waves, making higher high, higher low, lower high, lower low when it is in a trend. Rest of the time price consolidates in a sideways market. Market structure can be easily understood by application of different market concepts as discussed. I showed you bar by bar analysis. I showed you multiple time frame analysis. I showed you how to capture the wave structure. I showed you supply and demand. I also showed you the resistance and support. I also showed you Fibonacci and so on and so forth. And with those concepts, I think your understanding of how the market structure and how it is dynamically moving every now and then. So moving forward, so I can go 5 minutes. All right, thank you. Thank you. Is the injury time. 5 minutes granted by the referee. All right. Okay, so moving forward, here at TradeView we encourage traders to build their own trading systems. Supposing you have an idea, or I gave you 3-4 ideas in last 40 minutes which probably you liked, and you want to take advantage of that idea, then we can help you to develop in that idea into a system. Okay, or take advantage of our proprietary trading edge through different trading models. As I told you, the daily model and the 12-hourly and the 4-hourly, which we are trading every week, every day, if possible. That is a setup. Okay. And FX Bookie is asking, do you consider fundamentals? Not much. I only see the FX Street and Forex calendars, so not much, because fundamentals is good to know. It is true that fundamental moves the market, but actually speaking, we trade technicals, and since fundamentals can be extremely delayed. So the reason for this is that you should then be able to build further systems or continue to take advantage of our trading edges. If you have any trading idea which you are pursuing, then in that case, we at TradeView can assist you to fine-tune the same and give it a shape that is more effective. If you are stuck for ideas, then let us assist you in your trading journey via a 12-month program. So we at TradeView have a trader development program which is 12 months, and we also have beginners, intermediates, and advanced system development, as in algorithmic trading. So we have both discretionary trading as well as non-discretionary trading. So if you are interested to know how we trade multiple markets professionally, or how we scale into markets, or you would like us to help you in developing your idea into a trading system, or learn the effective money principles that we follow for our proprietary trading edge systems at TradeView Investments, then do not hesitate to contact us at admin@tradeview.com.au. Now the competition. Since you are with me for last 45 minutes, you must provide as much detail about your understanding and interpretation of market structure and its dynamics. So price is 1 hour coaching session with me, valued $500 Australian dollar, and you can submit the entry at this. So let me copy paste this to everyone, so that you can take this. All participants, and yeah, so probably you got it, right? So please let me know whether you got it or not in your chat section. Jen is saying, can you post your email address? Yes, of course I would in a minute. And the winner of this competition, which is valued $500, will be announced at our next webinar. Robert says yes, got it. Thank you, Robert. Now this is everything you wanted to know from the beginning. My name, my telephone number. I'm in Australia and Melbourne. So +613 9018 5438. My email ID, partha.banerjee@tradeview.com.au. Skype is TradeView, my tradeview.pb. So my Skype ID. Sorry for that. So let's put it. Skype ID is tradeview.pb as in Partha Banerjee. Okay, and let us help you to develop as a professional trader, as all of you 100% wanted to be. Download our free trading guide. Someone in FX Bookie is asking, are you from Singapore? No, I'm from Australia. And I big thank you all and for holding on to me for last 45 minutes, and trade well, mate, and get in touch. So FX Trade, very good. FX Bookie says, as you study there. Oh, no, I did 1 degree from there, that's it. Pan says thank you, Bookie thank you, Can thank you, Robert thank you, everyone thank you. Jen says thank you sir, you are incredible, amazing. Thank you so very much, Jen. It was a wonderful, that's what. When you speak from your heart, that's what you get. Fantastic, that's a nice comment. Thank you, Carlos, thank you. What is the link for trading guide? Trading guide link is there in the tradeview.com.au, and in the beginner section you'll have that one. So please visit tradeview.com.au. You will come to know everything about that. All right, thanks FX Trade, thanks Jen, God bless, thank you. And